like, I don't want to say love hate, but my one buddy is like all about John Wick.
Yeah.
And then I was like, I was watching. So when I work from home, I like video games. I'm not good at them, so I like to watch streamers because it makes me feel good about myself because they're good at them. So
Yeah.
I watch crap, what's his name? Swag, who's part of FaZe. And
Okay.
he was like all about John Wick the other night. He was like, yeah, I'm gonna go see John Wick. And so it made me think, I was like, am I just 4 episodes late on this great like series that's eventually gonna turn into like the next James Bond?
No.
Or okay.
No. No. The first one was really good. The second one was okay. Third one, eh. The fourth one, I just you know what it is? They preoccupy with killing rather than with the actual story. And so yeah, it didn't feel like there was no mystery left to me anyway. Yeah. It's just I would say to anyone trying to watch John Wick 4, like most of the theater was empty. And this is like on a Saturday night, you'd think that it would be 100% full.
It just came out Thursday at midnight.
Yeah.
What?
Yeah.
Let us know in the comments if you've watched John Wick 4.
Did you go to AMC?
I went to a Regal because that's like closer to my home.
Okay, I was gonna say short AMC.
Bro, is it like a romantic comedy, the series, or it's
scary? John Wick, Keanu Reeves goes around killing people. He's an assassin.
I've never seen it, so I don't know.
Yeah.
Interesting. Someone said
straight up killer.
I didn't like their fourth. There was supposed to be a fifth, but they changed everything.
Oh.
Yeah.
Is the fourth going to be the last one?
So maybe and maybe not, because there's like a cutscene at the end that like has like another story arc, but yeah, I'm not sure.
Oh, it's like the Marvel movies, like at the very end, they always have like a little.
Yeah. I don't want to ruin what happens in the movie, so I'm not gonna, because I don't know which viewers are watching. So, but the ending is like blah, Yeah, believe it or not, I want to see Cocaine Bear. I wish I had gone to see Cocaine Bear instead.
I mean, I heard it here first. I haven't been to a movie in a while.
Yeah, I haven't been to the movies in a minute. But okay, so stocks, Palantir Weekly. So sorry we're doing this a little bit late, guys. I had to go pick up my mom from somewhere. I took a wrong turn, got 10 minutes late, so we're here late. But thank you, 51 people, for being here Saturday night. Chris, hopefully you're feeling better because I know you were doing coughing a little bit yesterday.
Still got the cough. It's like a wheezy cough. I
think it's COVID.
No, it's not COVID. It's probably just like allergies. Because like
better a cough than a clap,
Huh?
Nothing.
There it is. Yeah.
All right. I'm gonna get flamed for this romantic. You know what I was thinking? I was thinking of John Something Must Die. Remember that movie?
John Something Must Die. Yes.
It's about this girl killing a guy. Yeah,
that's definitely a romantic comedy.
Yeah, it's a romance comedy. Yeah. Okay, so we got some stuff to talk about Palantir. Before we get into that, market has been a little bit crazy this week. We got 25 basis points. Some stocks running, some stocks not running. Nvidia went to 270, came back down a little bit. Some overall thoughts for the next 10 minutes about what's going on in the market. Matt, we'll start with you.
I don't know, man. I thought we were kind of easing through a lot of this, and to be very frank, I don't know if I said this last week or 2 weeks ago, but this whole credit crunch, I feel like, or liquidity crunches rather, not really credit, but it's more liquidity, has me a little bit uneasy, to be honest. I see a lot of people being like, let's rush into some banks, and I'm like, are you guys really actually realizing what some of the risk might be? And I just feel like we're not 100% out of it yet. I feel like there's going to be a couple weeks worth of just quietness, but I feel like there's going to be another shoe that drops with it, and I don't think it's going to turn into something where, I'm not a huge bear. You guys know me. I'm generally an optimist by heart. I just think it's going to be putting something where we won't really come out of this, like, I guess, cycle of interest rate raises and all that until like the May timeframe. So I think it's just going to be another 1 to 2 months of real just up and down volatile markets. News is going to come in that's positive. News is going to come out that's positive. And I guess until you really see like actual numbers from inflation, CPI, all that really come in April, like, so I guess that's probably 3 weeks away. You probably won't have any good news that really comes out. until then that really would make the market really hit some sort of bottom or local bottom, if that makes sense. Because I don't think we're going to go back to the July or June lows where we hit the 3,600 or whatever on the SPY. But anyway, just I'm not, how do I say it? I'm not optimist that we're out of it, but at the same time, I feel like we're in the 8th or 9th inning of where kind of the interest rate cycle needs to be. I did see some crazy stuff about mid 4s are going to be where the interest rates will be in 2024, and then mid 3s to low 3s is where they're going to be in 2025. So that gives me a little optimism, but at the same time, I don't know. I'm just in this weird period. Sorry.
Okay, Chris, thoughts on the market right now?
I mean, I told you guys there's pockets of opportunity presenting themselves every day. And it's funny because there's a lot of babies that are getting thrown out with the bathwater. And all you really need to do is just literally go to their last 10K and just read. Like, people just don't know how to read 10Ks. I will go through a 10K like there is no tomorrow just to figure out everything that's going on with the company. And some of them are just like, I'm just shocked at the value that's being presented. And what's kind of interesting is even among certain sectors that are getting hit overall, there are going to be winners, like commercial real estate. Okay, for some reason I'm seeing on Twitter everyone and their mother like short commercial real estate, and I'm like, holy shit. Okay, let's take a look. Let's deep dive into some of these commercial real estate companies.
You can call me out, Chris. You can call me out.
Not you. No, not you. You at least asked me. It's like, what's going on? Like, but some people are on Twitter just basically like, oh my God, commercial real estate is dead. Like, people will never go work back in the office again. And I'm like, clearly you don't know what's going on. Like, and especially if you're like local to a certain area, you can start seeing the return to work. Like, even Google, Microsoft, Apple, everyone and their mother is like trying to get workers back into the office. So it's like, what are you guys trying to short? You're trying to short the inevitable. And then you look at these companies' balance sheets, and some of them are trading at like book to value, at like almost a quarter to book to value. And I'm like, holy shit, you guys are stupid if you're trying to like, there was a point where you could have shorted and made some money on it because the cap rates, whatever.
It's too late.
Yeah, but it's too late. Like, you can't, it's to short a company that's down 80% from its highs is dumb, especially if you don't know what the company's real fundamentals are and everything else. Like, I agree that some of the stuff in terms of overvaluation was there, but I feel like retail right now, because of the way that Twitter is, people are just jumping in and getting into like, I feel like retail just discovered how to buy puts and shorting, which is crazy. And yeah, I just think that there's some
stop
opportunities.
talking about me.
Not you, man. I'm on the side that when you see fear in the market, you should be looking for opportunities, right? They say, like, when there's blood in the water, you should be hunting for deals, right? And what's interesting is, if you look at the 10K, you don't need to know the entire 10K back and forth. Usually it's one page that's like the aha moment. Like, I looked at a company right now and everyone's like, oh my God, interest rate risk. And I looked at the interest rate risk. I went into their 10K and I was like, wait a second. Their entire portfolio that they have of mortgages is all swapped. Like, they have protection. This is not like SVB, where literally they had all these treasuries but had no interest rate swaps whatsoever. So they got killed on duration. These guys have a ton of mortgages, but all of them are interest rate swapped. They have credit swaps on them. So literally what happens is, if interest rates climb, they don't have to pay that higher interest rate. They literally are capped at what they're paying. So the short thesis is, well, interest rates are higher. That means that this company is going to go bankrupt, because what's going to happen is when you renew your lease, it's going to be so much more expensive. I mean, when you renew your mortgage, it's going to be so expensive. And I'm like, yeah, but dude, even their maturities on their debt is like low in the near term. So like I said, I've been doing privately a lot of research. I'm not going to talk about the company that I found.
I know the company you're talking about.
Yeah, but I'm not gonna talk about it on here, only because like I'm still doing a more in-depth research on it. And I'm probably going to be taking a position in it sometime next week. And like I said, it's the assets that are not loved that are typically the ones you want to invest in. Matt, think about the returns you would have got when oil was unloved in March of 2020, right? Where everyone was like, there were negative for the first time ever. You had oil in contango and you literally had, it was the dumbest thing possible because you had no storage, but you had all this excess oil. Imagine you had bought futures at the time, how much money you could have made. Literally, their bounce back was so sharp. So and someone's like, Chris is about to invest in a value trap. Okay, if that's what you think, go right ahead, man. Go right ahead. You know,
It is, yeah, it's a double-edged sword. There were some people, how do I say it? Like Oxy is a great example, right? Everyone loves Oxy now. Icon was buying it at the time. Buffett was buying it at the time. A couple people reached out to me during that time. I was living in Trinidad, for those of you guys that follow my story. But a lot of people reached out to me like, what's going on, man? Like, should we buy Oxy? Like, it's trading at 12, $13. And I'm like, I don't know. Like, they had just bought the Anadarko assets for anybody that follows the oil industry at the time. And they overpaid by, I think it was like 60 to 70 billion versus what they were starting at, which was like 40 to 50 billion. And then Chevron bid it up, which I think, it was just a matter of time before Anadarko got bought out. They were literally printing money and doing really, really well.
Yep.
And I'm upset that I didn't buy a position in them prior to the buyout. But regardless, and then as soon as Oxy buys them, everything goes into the tank, right? The pandemic hits. And so the cash flow from that perspective, they just had to pay all this debt and they didn't have the oil price to help support them like they used to. And so everything went to crap. And then obviously Buffett comes in, gives them 10 billion, Icon comes in. And so then you had this lifeline. And I should have at that point been like, these guys are probably going to be okay. But before then, I'd already made my decision. Like, these guys are running low on cash and it's really just a gamble against the oil price. When's it going to rebound? And if it wasn't for Buffett, I really don't think that Oxy would have made it out alive. And at one point, they even stopped paying an actual cash dividend to Warren. They actually started getting him shares because they didn't want to give any more cash. But he was still banking because obviously he was getting a 10% preferential. I think he still does 10% preferential dividend from them. But anyway, no, it's 100% true. But some of those stocks obviously aren't around anymore. So.
And I always feel like there's going to be phases where there's always reversion to the mean, right? Where things get oversold and then they revert back to the mean. And so you want to be in industries like that. So for me right now, I'm looking at commercial real estate. I'm not picking up every single piece of commercial real estate that I'm finding, but there's definitely companies out there that are highly specialized in certain things that are definitely worth looking at. They have high cash. They have more than enough cash flow to cover their debt and cover their dividend, right? And at the same time, they don't have maturities coming up. And if the Fed, and I'm like 99% sure at this point, the Fed is likely to do some additional cuts this year, it's like it's going to be to the races, man. It's going to be crazy. The amount of people that are going to be rushing back, and I can already see it. Like vacancy rates in New York City are starting to kind of go down. You're starting to see a lot more people coming back in. So yeah, like I said, I would say you have to be very selective. You have to do a lot of research on them, and yeah, I think it's worth looking into. So.
I do have a question because you're more probably well versed on this than I am, Chris. So from a regional bank perspective, do you think that with the Fed, what they did, basically opening up the liquidity window and saying, hey, we have several $100 billion if folks need it short term, and by the way, I think it's very different what the Fed is doing in terms of saying what they did for quantitative easing in the past versus what they're doing now, right? What they're doing now is just saying, hey, we'll give you the liquidity until these short-term securities that you have on your books come to fruition. And then basically, you guys have the supply. It's all based off the mark-to-market accounting, which I think a lot of people don't realize. And I think a lot of people just assume, oh, it's just like 2008. It's very different, right? The 2008 bonds actually failed. Like everything just went to zero. Not really, but the actual value versus these things still have value, right? It's not like the mortgage-backed securities back in 2008. Like these things still have value. It's just interest rates have risen so much that the value of them has decreased. But if you hold them for long enough, you're still going to get the payout and you're still going to get the coupon rate from the government. It's just, I think people assume that, oh, mark-to-market accounting, all these banks are closing, I don't know.
Yeah.
Just throw that in the room.
I'm seeing some comments in the chat like NYMT and REITs. So number one, no, not mortgage REITs. All right, I made shit ton of money in mortgage REITs in 2020 when things collapsed at the time. Right, that was a good time to buy some mortgage REITs. Right now, just go straight into REITs, and depends on which REITs you're looking at too.
I
So
loved Starwood back in
yeah,
2020.
that's right. Those are like amazing opportunities where literally everyone was just. I don't know. I don't know the stupidity of people to sell off high quality assets like that. And Blackstone just picked up everything at the time. Blackstone was just buying up everything. So, there's one rule when it comes to real estate. God's not making any more of it. So, find some high quality assets, buy some companies that are going to benefit, buy it when it's cheap and sit back and relax and collect the dividends for the next 100 years, So, yeah.
Okay. Good. A little talking about the state of the market, where we're at. Again, everything is pretty unpredictable. Let's get into some first Palantir news of the week. HD Hyundai acquired a 25% stake in Palantir Korea. Now, we've known Palantir and South Korea have had a relationship for a long time. This picture of Peter Thiel and the chairman or the CEO of HD Hyundai, this was out October 2022, but this news about acquiring 25% of them just came out a couple of days ago. It was interesting to me because last week we saw a clip of the BP CEO talking about how they were so valuable. We had to buy a percent of them. They've since liquidated those shares they had. But any thoughts on HD Hyundai, who had a $45 million deal with Palantir for the shipyard industry in South Korea, actually getting 25% equity in a subsidiary of Palantir in South Korea and really forming a long-term relationship and any implications that has going forward?
Let me start off with this one, then you can chime in too, Matt. Their joint venture like business model has sometimes worked really well and sometimes it's failed miserably. And so it's always going to be a hit or miss, but I've seen that from an industrial standpoint, they've actually been very successful. So an example is, of course, the biggest one that we all know, which is the deal with Airbus, right? That was like hugely successful, wildly successful. Sampo, from what I can tell, Sampo Fujitsu, that one is successful.
Huge.
The one the one that they failed on miserably and they had to take a $50 million write-off is Credit Suisse. Like in 2019, they had a deal with Credit Suisse where they were going to jointly develop a system that helped identify rogue traders and all this other stuff. And it just went nowhere. It was complete garbage. The entire joint venture failed. They had to actually there was actual legal cases around it because the person in charge was saying that Palantir executives and Credit Suisse executives were trying to make the numbers look better than they actually were for the joint venture, right? So there was a lot of fallout from that. So I would say Palantir's joint venture model, it's a hit or miss thing, but I think this one's definitely a hit. So they've done exceptionally well with industrial. Yeah, there you go. Yeah. And it was called Signac.
This is another one where they're saying that the Palantir is following them. Same thing as Morgan Stanley, right? Or
Yep.
JP Morgan, whichever one it was.
Well, yeah, it was really bad, man. It was really bad. Like the scandal that erupted behind this whole thing was bad. And now you can tell Credit Suisse is gone,
Put the article in the chat for anyone who wants to see it. Real quick before we get to Matt, when you say this one could be a hit, what makes you think it could be a hit? Is it because we've worked well with South Korea? We have the $45 million deal already, or why do you think this one could work? Chris, for you.
Oh, mainly because number one, their core competency is working with industrial partners who are, one, reliable, two, actually have an entire business that's working, and they're not trying to do things that are like borderline, how do I say it, risky. It's almost like, okay, how do we build ships faster? There's no faking numbers. There's no oh, this can happen, that can happen. There's no spying on people. It's like, no, we just want to figure out how to build ships faster, right? It's the same thing with Airbus. How do we make our planes faster? How do we keep our data logged there? There's no quid pro quo and all this other extra shit that typically happens when it comes to finance and law, where there's especially finances. Everyone is looking to manipulate the numbers to fit a narrative. That's how I always find it. Look at all these banks, right? These banks are always either showing numbers that are sometimes too good, sometimes not enough, and they're more like, what's the word?
Fugazi.
They're more fugazi, yeah, exactly. Than something like building ships. Like there's no way around how many ships you built last year versus how many ships you built this year with Palantir, and what were the main benefits that you had. So yeah, that's what I'd say.
Yeah, and I think that that's part of the tool of Palantir is that it does eliminate really the storytelling aspect of business, which I think a lot of people have excelled really well in. I think even in my own company, I've seen people that are really good storytellers that are literally talking out of both sides of their mouth, end up being excelling within the organization. And you can't really do that if the data is truly organized in a way where it's visible, people have access to it, and the dashboards and stuff that you can create really show a different sort of technology. And I've called people out in my own organization. I think some of it is people just trying their best and they might, tell themselves stories. And I think other times it's people legitimately just trying to, unfortunately, when you have to make a decision, sometimes decisions go well, sometimes decisions go poorly. And I think sometimes people just try to keep the ball in the air so they don't have to make a decision, because then you can just keep going about your day-to-day business. But I think going back to the actual partnership itself, I think that one of the things that differentiates it between what happened with BP and what happened with now Hyundai is this partnership isn't publicly traded. So Hyundai can't just be like, okay, by the way, we're selling out, right? This is a partnership and a subsidiary of, which I don't know if that shows up as shares or not, but my anticipation is it's probably a whole separate sort of subsidiary that they own this 25% of, and they can't just sell it on the open market like they would if they were, say, BP. So I think
I didn't even know we had a Palantir Korea, Palantir Japan. Like I knew we had offices there and businesses there. I didn't know there was a whole, like the business is expanding so deeply into those countries that they need to have an entire separate division from the main company.
I thought, correct me if I'm wrong, both of you, I thought Japan also had bought into what Japanese insurance company had bought into.
Yeah,
Sampo.
Sampo.
I thought they had bought in. Yeah,
they did.
Yeah. So that's the thing with every company, right? Whenever you're working in another country, you have to follow their laws and everything else. So even from an operational standpoint, you need to have an operating structure in that region that specifically follows the rules and regulations of that thing. So if you look at like Apple has subsidiaries all over the world. There's Apple corporate, but then there's subsidiaries of Apple in almost every country that's out there. Because whenever you do business in a certain region or a certain country, they have certain reporting requirements, they have certain rules and regulations that they have to follow that may not necessarily translate to their American parent. So this is not a new thing. The good thing is that equity partnership gets them the ability to appreciate over the long term from that partnership. So what happens is, like, let's say Sampo Japan, right? Or Palantir Japan. If they work with a third party, like let's say Fujitsu, and they work with another company and they work with another company, all of that revenue that's being generated is also actually building up an asset in Japan. Like, do you guys know the whole thing with Yahoo? Like Yahoo was very popular in the US and everything, but it eventually died down.
Exploded in Japan.
Yeah, but it exploded in Japan, and for some reason it still was very popular in Japan all the way to like 2015 or something. Like, and so because of that, they could eventually sell that whole thing also. So yeah, you have to have subsidiaries do that, but the fact that you have equity buy-in from some major companies means that they believe in not only the product, but they believe that it'll yield them a net positive return in the future. And actually it's really good alignment. Like, it really aligns the customer with you, because now it's like, let's grow together, right? Same thing, this joint part. I'm sure, I don't know if the Airbus deal is structured in a similar way, but I'm pretty sure it probably is, where it's a joint venture between Airbus and Palantir, where Palantir supplies the software and Airbus supplies their monitoring software and everything else to the airlines themselves. So it's almost like the airlines, Airbus collects money from the airlines for the service, and then Palantir gets a cut of it because it's providing the whole like infrastructure for it. Yeah.
Yeah, it's interesting. I mean, Yahoo, as we can see right here, yahoo.co.japan, 1.9 billion visits a month. I mean, like, it's interesting why companies, for some reason, take off. Like Twitter, for some reason, in Japan is ridiculously popular. It's the second biggest country in terms of user growth outside of the United States. So yeah, I mean, there's a lot of potential in Palantir in Korea and in Japan, and I agree with you. Like the fact that there's a company that they already have a deal with buying in just lines them up so well in terms of where they are in terms of headspace on how the company will expand. The other bit of news we had this week is Palantir was awarded a $18.5 million modification to an existing contract that they got in May 2022. This is for Project Brown Heron Data as a Service. It wasn't really anything too crazy. I don't know if it's 18.5 million extension or something. I know the total value of the deal is like 190 million, and they got 54 million back in May 22, and now they're getting an $18.5 million modification. Any thoughts on this relatively smaller government contract that they're getting?
No, this is good. This just means that whatever Palantir's providing is they're finding value from it and they're willing to expand a contract. I think this is great. Like the question is what kind of deal terms are in there? Where is it like a consumption model or is it subscription model? Like what is it that required the Air Force to put in more money to the partnership, to the not to the partnership, to the contract itself? Because usually you'd have to like look at the deal terms, which aren't exactly public, but it's basically like depending on who you are, you're either providing almost like the seat system where it depends on how many users you have and you get paid on the number of users, or is it a system where it's almost like pay as you go that Snowflake has, where the more queries you run, the more you have to pay, and you might run out of credit, so you have to pay more. So I don't know. So, but yeah, I think overall it's bullish for Palantir in terms of the Air Force, where you can see that the Air Force is getting value, so they're extending contracts and they're spending more money than they were last year. Yeah.
Matt, your thoughts?
No, I agree. I think it feeds right into their business model. Maybe just get in your foot in the door, start small, and continue to see. And I think what ends up happening is you get your foot in the door with Palantir, and it's such a great piece of software, Foundry, and all these other back end things that they try to do. They build it customized. They'll bring Foundry in, which is kind of a standard, and then they'll build custom applications, and then other people in the organization are like, hey, they get jealous almost, like why do you guys get to use this cool thing and not me? And then next thing you know, you get another couple hundred people every year that have access and use more of it, and obviously because of that, that's more cloud that they have to use. So then obviously Palantir has to re-sign, and it just is in that expansion, just like Palantir wants, right? Which I anticipate is a lot of why you're seeing all these customers continue to come in through the door. You're seeing 70 customers here, 80 customers there, and it might be a small contract, if nothing, right? Some of them might fizzle out, right? Only maybe 80-85% of them stay. But at that point, boom, they're kind of stuck. The culture within the organization changes. The reliance upon Palantir becomes greater, and it continues to expand and grow like a weed throughout the organization, just like we've seen at all these other big organizations, right? So I don't want to beat a dead horse, but it just is a continuation of showing how the business model works really, really well.
Okay. Last piece of Palantir news, and then after that, you guys can start putting in Palantir questions in the chat, or just questions about the market, anything like that. There were only 3 big pieces of news this week, so we'll go over this one, and then we'll do questions for 10-15 minutes from the chat. So Palantir was awarded an Australian Transactional Report and Analysis Center, Coestrap, renewal to support financial criminal investigations. Since 2017, Palantir has partnered with Coestrap to optimize their use of financial data in support of criminal investigations. Coestrap builds resilience in the financial system and uses financial intelligence and regulation to disrupt money laundering, terrorism, etc. And this is in Palantir Australia, speaking of subsidiaries. So we are proud to continue and expand our partnership with Coestrap and remain firmly committed to supporting their mission. Coestrap personnel are using Palantir software to identify national security threats and to detect and disrupt criminal networks, a real contribution to making Australia safer. So this was interesting because they're using Gotham and Foundry to integrate and fuse large-scale data across their enterprise. I didn't even know, again, that there was a Palantir Australia or that there was this Coestrap thing that was going on there. So any thoughts on this contract renewal?
Yeah,
think
just
sorry, go ahead, Chris.
no. You go ahead, Matt. You start.
I was going to say it just goes back to their bread and butter, right? I mean, I think that this is what Peter Thiel and all them have really been working on since 2003 after they left PayPal. And they were like, okay, it's counterterrorism. We have this algorithm at PayPal that we're going to use to kind of ramp into seeing how we can detect money laundering and all these other things to help detect bad actors. And here you are, 20 years later, continuing that sort of journey and doing the bread and butter of what Palantir was kind of founded on. And I think a lot of people don't realize that this is really the bread and butter of where it started back in 2003 timeframe. And it's really transformed into Airbus and the BPs and the, all the not Johnson and Johnson, Tyson Foods and all these other places. But this is really like the core as to what Australia or what Peter Thiel and them really had envisioned for this.
Yeah.
And this is on the back of what just happened in basically Europe as well, where they're helping to try to, it's not exactly the same. This is more towards counterterrorism and stuff of the like, but it's kind of the same with respect to financials and making sure that liabilities and everything are kind of
And
in
it comes
check.
on the heels of the bank collapse, right?
Yeah.
Chris?
Yeah, I mean, this just goes to show that there are multiple use cases for Palantir. It's funny that we're talking about this right now, but this whole thing with SVB, FRC, all these things, they could have been prevented if they had Palantir integrated, where literally there could have been real-time data streaming from these banks reporting out every day what their balance sheets were looking like, what their risk exposure was to certain things, and they're reporting every day to the Fed. And I know that sounds like, oh, that's a really impossible task. But no, it's actually not impossible if you have something like Palantir integrated into your data sets where you can securely transmit the data. So yeah, and it's funny because what's his face? Chamath from All in Pod, he actually specifically brought that up. Like, oh, if this was around, then they wouldn't have happened. Like, yeah, we could talk about something. I'm gonna find the clip and I'm gonna play it. Hold on.
But is that too much like government interference?
No. From a regulatory standpoint, not at all. Not at all. If the health of the economy is at stake, and especially
the
if
Fed
the
has to bail
government,
them out when it all collapses, might as well.
yeah,
Like,
I mean, you are if you're an what's the word? Existential risk to the economy, then yeah, you should be willing to accept transparency. And especially if it's a safe and secure transparency with your own regulators, then yeah, definitely go for it. It's not like we're asking you to make public every day what your balance sheet are and this posted somewhere where it could be monitored. No, you send it securely to the Fed, to the Fed, the FDIC. So the FDIC and the Fed know exactly what's going on. This way, even the Fed and the FDIC can model how much they can raise rates without damaging the economy. I mean, right now, Jerome Powell raised the rates to control inflation, but had no idea that this was going to happen, that the system would break. Why? Because guess what? There was no one monitoring this part of it, right?
Yeah.
So
do you agree with the 25 points, or do you think that it was just because he feels like he has to continue this narrative of, hey, we're going to be hard on inflation? They don't have another piece of data yet to really. Sorry, I know you wanted to move on to a different segment of it.
No. I think
it was good. It was good.
I think this was needed because there was already a bad month in January, so a lot of people were expecting the rate cuts. Had they not done the rate cut, it would have been a signal that, look, something fundamentally is broken with the economy, and more people would have been pulling their money out of the banks. That's one problem. If they had raised rates too fast, you might have seen collapses in other areas of the financial institutions. Right now, you've got lending standards that are tightening like crazy. I think inflation's about to get its ass handed to it in the next probably 3-4 months. If you're looking at the data live that's coming out from all sorts of locations, you can see that there's a huge disinflationary movement happening in certain core goods and core services. It's just that it's not being presented because the Fed is lagging when it comes to this
several
data.
months. Yeah. Are you talking about like mortgage applications and just like everything?
Yeah, mortgage applications, originations, if you look at those, like most of the buyers in real estate right now are transacting with cash. The number of mortgage applications is like, I think at almost like a 20-year low right now.
Yeah,
right?
I think last I checked, it was like the 2011, 2012 low, which obviously was a hangover from 2008. where housing prices had declined 20 to 25% since kind of like 2007, 2008 timeframe.
Yeah, and the other thing is, I would not trust Jerome Powell with his words at all, because even the Fed knows that there's a certain value to how you present yourself, and that could in itself be almost like a rate rise, right?
Yeah.
Where Jerome Powell comes out and says, "Don't expect rate cuts." But inside, I was like, this motherfucker's lying to everyone. He knows he's gonna have to cut rates. And the bond market doesn't trust him either, because the bond market, people were buying up all the bonds. So you could see they went down. I was like,
no, I think that's a good piece of information that I don't think a lot of people. I don't know if it was like an interview prior to Wednesday, or if it was on Wednesday's Q&A. I was listening to both kind of over the last few days, and he said just exactly that. He's like, there are things in the economy that were equivalent, if they occur, to being the same as a 25 or 50 point hike. So if something were to occur, like what we have seen with SVB, then why 25 points make sense as opposed to half a point, because those things are going to instill fear or slow the economy down more or create lending problems like you're kind of talking about. Restrictions is probably a better word than problems, that are going to attack inflation. And so instead of them using interest rate policy to do so, they can use those things to kind of compile on, and they don't have to take as much of an aggressive approach.
Yeah, it's going to be interesting. Chris, do you have that clip you want to the Olin thing, or no?
I
have
need
another
a minute
segment
to
we can
find
move
it.
to. Okay, so why don't you pull up the clip? We'll do this segment. That'll probably take us like 7-8 minutes, and then we can watch the clip at the end. So someone had a good comment in the chat that I think actually, because we're on the pod, it definitely deserves a segment, and we can all kind of give a little bit of airtime to it, which is Coestrap's last video is coming out tomorrow. A lot of people have been messaging me, asking me what's going on with Coestrap. Is he working for Palantir? All this type of stuff. The truth will be revealed tomorrow, I think at 10 a.m. Eastern. So he has a final video coming out. From my personal conversations with him, it does look like this will be his last video, at least for a long time. Maybe that changes, but it's going to be an end to his presence on social media, at least in the YouTube content space, because the reason tomorrow will explain why it kind of has to end. So yeah, he's not going to be that active on social media anymore, at least in the Palantir community. He made a video a couple of days ago, kind of just saying that it's about to end soon. I guess let's do 5 minutes, 6 minutes on kind of what Coestrap has meant to you in the community itself, and then we can go from there. Matt, you can start first.
Sure. I think it's just a natural fit. I mean, I'm not surprised. I saw the video and I thought it was a really cool video. The rock theme.
He has a creative juice in him when it comes
yeah.
to editing. Like,
but that's the thing, is like, you think that that's just a creative juice of, like, say, editing, but that's just kind of the creative juice that flows at Palantir. Like, if you've ever met any of these employees, they have just this difference about them, just like Coestrap does. And so, like, it makes sense if he announces tomorrow, which I'm anticipating he's going to get a job at Palantir. I think he's the type of personality that's quiet, listens, is very intelligent, but not like over, I guess, boastful about it. But at the same time, is all very community driven. Like, he has all the key values of somebody that is great within Palantir. And I think one thing that I think we should take away from his video is we see somebody as intelligent and has had the opportunity to test on a multitude of different levels, different products over the past year or so, and has been in the industry for such a long time. For him to go now to leave our, I guess, immediate retail investor community, but be still part of, obviously, the Palantir community, is a huge testament and gives me confidence, as I've always had, in what Palantir truly shows, which is it's a movement. It's not a stock. Right. I mean, we talk about it from a financial standpoint, but to me, it's been a movement. To me, it's been since 2017, 2018, since I first used it, and have seen the continuation of this with Coestrap, obviously being that next brick in the wall, to be like, dude, like my conviction is here, right? The share price just needs to catch up, and it will. And I'm confident by the things that I continue to see, the contracts we're talking about today, contracts we've been talking about over the past year. Coestrap, that familiarity and things that I have confidence in, like, it continues to grow stronger because of everything that I continue to see and know that the company is capable of doing.
Yeah. I would say to Coestrap, thank you for being our Sandy Monroe. Like Tesla is what it is today because of Elon Musk and all that stuff, but the Tesla retail community benefited tremendously from Sandy Monroe because Sandy Monroe had the industry experience. He looked at the cars. He really brought to life what the value proposition of Tesla was. And the early people who listened to him really benefited tremendously when Tesla eventually blew up, right? Because everything was confirmed. Everything that Sandy was saying was confirmed. And it's the same thing with Coestrap. He's been in the industry long enough to the point where we can safely say that this guy's not talking out of his ass. Like he knows what he's talking about. My personal take on Coestrap is I loved him for his ability to cut through the bullshit. Like if you were wrong, he would tell you were wrong. If you were right, he would say, yes, you were right. You know,
Yep.
he didn't mince words on things. And I think that's something that Palantir needed because, they've always been known as the shadowy figure that works in mysterious ways, whereas Palantir's, like X, Y, and Z, and people are still trying to figure out. And Coestrap brought some of that energy, like, no, let me explain to you what the value proposition is that other people are not seeing, right? And yeah, I thank him for all those things because I feel like there's still a lot to learn about Palantir, even from my perspective. But Coestrap was one of the few people who really, like, being an industry insider, was able to grasp that knowledge and simplify and dumb it down a little bit for us. And I think everyone is still always going to be a little bit lost on Palantir. I don't think you could 100% ever figure them out. And maybe that's just who they are and how they operate. Yeah, but I thank him for all his contributions, man. And I'm going to miss our interactions because I know he's going to be very limited in what he can say. Because at this point, it might be some knowledge that he's not supposed to let out. So, and that's probably why he's making the changes that he needs to from a personality on YouTube perspective. But I would say I'm happy that he's going to where he's going. And I think he's going to do wonders for Palantir because he's still going to be involved in developing the product and and doing other things with it. I'm not going to let the cat out of the bag what it is. I do know. I don't know if Matt, you know where he's going? No, okay. We'll tell you after the stream. But let's just say one of us is going to be on the inside of things. Putting the things together that is necessary for Palantir to become its true potential. And hopefully Palantir's community is as accepting of him and his ideas to say, what we've been doing may have been working, but if we adopt this strategy that this guy who's obviously got a lot of experience, we might be able to grow faster. And those tangible results are going to benefit us all. So thanks for being our Sandy Monroe. Sorry to see you leave. I'm sure that you're going to be joining us with a burner account and you're going to be watching us,
And strap code 473.
all I want to know is Midwest Cannabis Alex Karp, because I'm telling
you, gosh.
I am not going to let go of that theory. Okay. I think Midwest Cannabis is Alex Karp. He's been, Midwest Cannabis, I'm telling you, bro. And Sham is that other guy. Remember what's his name that used to go on every single video and he used Doom Shalit. Yeah,
he was in the SoFi Weekly yesterday. He was there. He was like, "Hey, SoFi Weekly, but Palantir to the moon." I was like, "Dude, that's awesome."
Yeah.
My personal thing for Coestrap is I am so thankful that he was willing to engage with the retail community. I mean, not a lot of people have to do that, right? Especially people of his caliber. He's very busy. He understands the tech really well, but he was just willing to come on my podcast for the first time in February 2022. And for an hour, 30 minutes, he spent time with me breaking it all down. He went on every Palantir YouTube. I think Jay was the first one who really brought him on YouTube. And he was willing to just talk to us and really answer our dumb questions, which to him, it was never dumb, but for us, we're like, so what is ontology? And, and he never tried to belittle you when you asked that question. He tried to take the question and really give you example after example after example. And even if we still didn't get it after those examples, he really tried to get you to realize what the potential of this is and why this matters. The other thing I'm really grateful for is he never focused on the stock. or the financial side of it. I mean, he obviously he cares about the stock. He wants it to go up like all of us, but he always talked about the greater picture. I personally love covering Palantir because, as you said, Matt, not only is it a movement, but it's a philosophy. And I'm like a big philosophy junkie. So when Alex Karp talks about civil liberties and Western democracy, all that stuff matters to me. Coestrap really cares about that stuff as well. So he's able to articulate. I remember we did a podcast for like, we went until like 1 a.m. and he pulled up, or Chris, you pulled up Scalia and him talking from the Supreme Court. And Coestrap was able to analyze why those certain things he's talking about are applicable in terms of the infrastructure of the literal tech that Palantir has built to embody those philosophies that mean so much to us as Americans and, just protecting Western democracy. And then because he was able to talk about the tech and the philosophy at the same time, you have this gem of a person that can really analyze the value proposition of this company, which for us as retail, investors allows us to be like, all right, based on hearing this guy, I'm going to make a decision now. And it's one of the best guys you could listen to decide for your personal, capital where you want to allocate it. So yeah, thank you to everything Coestrap. Also, in my personal life, I have a startup. I'm starting up a bunch of things. He's given me countless amounts of advice because he's been working with startups for like 10, 15 years now. So it means a lot. Thank you for being here. And we hope to see you in the burner account eventually.
The burner account. Yeah.
Yeah.
And I will say, I mean, like a lot of what you described is a lot of the experience that I had with for development engineers with Palantir is they're willing to break things down. They're not going to call you stupid. They're going to say, oh, I'm here to help you no matter what. I'm here for the purpose. They don't care about the stock price. Every time I'd ask people, like, because at the time I started working with a lot of these guys, everything was private. And I'd always ask them, I'd be like, how much stock you got? Like, what are we talking? And they're like, it's not important, man. Like, they were just like shrug it off. And they all knew that they were probably sitting on pretty good compensation, as we've seen from the SBC that gets distributed every quarter. Right. So at the end of the day, if you want to know what a typical employee of Palantir that I've interacted with is like, it's a lot of people that are like Coestrap. And if you think and you like the way that he operates as a person, personally, from a I guess company mindset sort of perspective, then that should give you an inkling that Palantir is on the same sort of echelon of people that they hire. And it'll be sad that we won't be able to pick his brain anymore.
I've got a secret master plan. I'm going to let him get in the inside a little bit, give him like 9-10 months, whatever. Then just be like, hey, man, do you want to hang out one time? And just get him pissed drunk and just get all the fucking juicy information about Palantir, just extract it out of him.
So what does Alex Karp's hair smell like?
I'm gonna get his favorite bourbon and just ply him with bourbon because he loves bourbon. So I'm like, all right, let's go. I'm gonna learn everything I need to learn about Palantir.
And then Chris might buy one share after that night.
One share.
That will happen.
Yeah. We'll see.
Okay, so this is Chamath talking about why maybe something like Palantir could have helped with SVB.
And I think that what we did after the great financial crisis was the regulators wrote down all kinds of new rules. But the crazy thing in 2008 were those rules were written on paper. And now we're in 2023, and these rules can be written in software. And so I think what it requires is some amount of tactical real-time intelligence that regulators need to have over those that they regulate. And I don't know why we're so afraid of demanding that the next time some of these complicated real-time laws are written in law, that they also need to get written in code. And I think that that's a practical solution. It should be the case that every bank that's supervised by the Fed has a dashboard that has all of the key levers that allows what you said, Jason, to happen, which is a real-time mark-to-market. Should those should they not be disclosed to shareholders? That's a different discussion. But the regulators should have 100% transparency into how these organizations run, because, as Sachs said, they are an enormously critical institution that, at best case, after this fiasco, what we've realized is very poorly misunderstood by consumers. And that, at the worst case, is being mismarketed to us. Yeah. And I think that shouldn't be allowed.
We're also...
Okay. So when he said that, I was in my brain. I was just like, that's Palantir. He's describing Palantir. You know, this is exactly what all these companies need. They have their data warehouses feeding right into Palantir. That data is then put in a secure way.
The
Use the
governance of that
ontology.
data, that's a big issue.
Exactly. And it goes right to the regulator, and the regulator's already probably using freaking Palantir because they have federal contracts. So it's literally the same model that you have with the COVID tracking, the COVID supplies tracking, the COVID numbers tracking that the hospitals had to use. Develop a system very similar to that, but do it for the banks. So that, guess what? You as a bank, you have to adopt the software. You have to put it into your systems. So now all the data that you have every night gets sent, and the regulators are always on the know. They know exactly what's going on, what kind of risks that you're taking on, and that if you take on too much risk, boom, the regulators step in and say, hey, you're uncovered right now. You need to make sure that you're getting insurance on this product, or you're doing this to make sure that you're not causing a systemic risk. And even from the Fed's perspective, they can know, like, what are the ramifications if we do this? If we raise the interest rates by a quarter point, what's going to happen? Which banks are going to be in trouble? If we raise it by 50, which banks are going to be in trouble?
Yeah,
So that this way you can mitigate those, decisions and say, you know what? Tell the banks up front, like, listen, you need to get your capital ratios back up to higher amount, or you're taking on too much risk and you have an unhedged position, right? And basically, even if you needed to craft laws around that and change some regulatory regulations, like I said, these are the kinds of things that you really need to do. And I think Palantir would work wonders.
I really like what you said there, because I think a lot of, like, the banks, they might have some of that in their presentations, right? I remember when I was a big investor in Wells Fargo, kind of before the pandemic, and during the pandemic, I took advantage of it, and I've now fully sold out of that position. It was my largest position for a while, I think up until like mid 2021. But a lot of what they would talk about in the investor presentations, or just if you're following banks in like the 2018, 20s, these stress tests. And it's like this big black box. It's like, okay, everybody went through the stress test, everybody passed. It's like what? Like what exactly did they go through, right? Like what exactly what's the stress, right? And obviously here we are now, like 3-4 years removed from that, when I was really paying attention to it, and some of these banks have now failed. So would they have passed the stress test? Did they pass the stress test? And I think, to be honest, I think that they said that they did pass those stress tests, but because the stress test didn't include what we're talking about, which is the ever increasing interest rates, nobody really thought from a mark-to-market accounting standpoint that something like this would happen. And this is kind of something that wasn't really kind of thought of or predicted in those stress tests. But I think exactly what you're talking about, Chris, I think it's very prudent, because some banks are very traditional. They're brick and mortar mortgages. And so for those kind of banks, maybe you really only need like a 9% or 10% capital efficiency. But some of these more risky banks that are trading and, doing some other hedging and stuff of the like, they might need 13%, right? Like, instead of being this big black box, being like, you guys you need more than 9%, but 13% is like above average, right? So instead of actually having it just like on paper, kind of like what Shmata is saying, is like, maybe we should understand and have a dashboard to be like, with the assets that we have, we know for a fact we need liquidity of 9.6% CEF. Otherwise, our bank is going to go no bueno if interest rates are going up as fast as they are. Or somebody could say, well, we know we're a little bit more risky of a bank. We like to try to get more, margin on what not margin's not the right word. We try to get a little bit more leverage in there so we can make a little bit more return from our investing side of our business. So we need 11.5%. And that would actually have some data on that dashboard to kind of back that. But anyway, I digress.
It doesn't feel like over-regulation either. I mean, it feels like stuff that is necessary because it's an existential like a crisis if we don't have this knowledge. And if Jay Powell needs to not do 50 or 25 in March and delay it till May because those banks are getting extra capital to recoup, and then he can raise the rates, like, that knowledge is priceless. I mean, that can save an entire economy. Right now, it seems like he's just guessing, right? That's why 25, as we talked about, was just like, all right, we'll just throw it out there so we don't seem too hawkish, too dumb.
I mean, that just feels like, no offense, but like, that's kind of the stock market. Like, that's at the moment, like, that is kind of how the stock market operates. Is everyone's just trying to do their best. Everyone's just guessing and trying to push the limits until they feel as though that they're kind of running up to it. And then unfortunately, something like this happens, interest rates go through the roof. And that's why we're seeing a lot of these no revenue sort of tech companies or no profit tech companies really start to get impacted, where before they were just going to the moon. And I think now that we're starting to get a little bit more rigor in the system, maybe is really, driving us a little bit more forward. I feel like a lot of those inefficiencies that we've seen across different industries and stuff of the like will soon start to be realized due to products like Palantir. People start realizing that every time they swipe a credit card using a Visa credit card, it's 2.5%. They don't see it, so they don't care, but the merchant cares. There's 2.5% margin that they get impacted by. Small things like that, selling a house, 6%. All these small little things will start to soon be realized because the data will be captured, and I think we'll slowly start to eat away at those things.
Can we just talk about that real quick? I don't understand how realtors can demand 6% of the sale of a house. I just don't understand it. This is not like back in the day where they were driving you around. Most of these sales are still like traditionally, you find the house you like on Zillow or whatever, you reach out, you go and I don't understand.
Aren't you just
why
criticizing
they
the
get
business
6%.
model of a real estate agent and like
Yes, absolutely. Absolutely I am, because it makes no sense.
Well, so the devil's advocate is that they are doing all the hard work of negotiating, finding the house, and then getting the paperwork done. So they earn 4%, 5%.
No, if you're looking at, I don't think that. Like I said, I think that the back in the day when you actually had to do like listings, you actually had to take people to the listings. Okay, like one of my friends, he listed his house. Within like 2 days, it was bought. Right,
Yeah.
so the person that bought it didn't even like really come to see it. All they did was look at the pictures that were really nice. The realtor just hired a photographer to take some really nice pictures. The thing was sold, and she ended up banking like 6% on the transaction.
Yeah.
On like a $600,000 house, it's 36 grand just for like 2 days, for 2 days of work. And here's the part that's even more like weird. She ended up being his buyer's agent when he bought a house that was like 825 within like 30 days. And all she did was, he liked the house, so she got into contact with the other real estate agent, said, my client wants to see the house. They saw the house, they put an offer, they got it accepted in contract, and boom, she's gonna make 3%, which because they usually split it in half. She's gonna make close to 3% on an $800,000 house. I'm like, bro, I maybe I need to get into this real estate game and start selling real estate, man. So I don't know.
Yeah, the nice lady who we bought our house from, the vacation house in New Jersey. It was like a $450,000 house, I'll say, and she was our agent as well as the seller's agent, so she got all 6%.
Yeah.
So
My parents sold their house in December 2020, and that's when the market was going crazy, and they just wanted the agent because like they didn't want to deal with a lot of the hassle. But at the end, they kind of realized, man, we just gave this guy like 14 grand for not doing that much shit.
And you have to think that plays in. So if somebody moves in and then 2 years later, 3 years later, they're trying to move out, they're always going to try to list the house plus that additional 6%, even if the market didn't go up, because they know that for a fact, well, I don't want to lose money. And in the very first few months or years of your mortgage, you're not paying down a lot of principal. So they'll always be like, oh, well, we need to raise it at least 10% so we can walk away with something.
Yep.
Versus in reality, it's like the house may or may not have actually appreciated. You're just increasing the price so that way you don't walk away losing money.
So here's something that I did when I bought my condo both times. So the first thing I did was, I didn't have a buyer's agent. I just looked at the houses myself. If I really wanted to buy something, I would just say like, hey, listen, I want to see the place. And what I did was, and I don't know if it's ethical or not, but basically I looked at my condo that I have right now, and I spoke to the realtor who was, the selling agent. I said, look, I don't have a buyer's agent. Okay. You can get whoever else from your office and you guys could split the entire 6. Like, but I need you to get me this condo at under market value. So basically you do the job of convincing your seller to take underbid, like a lower bid than what they were asking for. I got it knocked down about maybe 10%, and she
Wow.
walked away with a 6% full commission. And she was able to convince them to take the hit on it, because now what happened is now she's incentivized. Technically, it's fiduciary responsibility to try to get the maximum best price, not the most commission. But she ended up getting a really good commission because I incentivized her to get the deal done quickly.
Because she didn't have to
Otherwise,
flip the 3 as well, right?
exactly. If you have to split half the commission, you're kind of like, oh my god, So she ended up walking away well, and I ended up walking away well too. I mean, I'm sorry. I guess the buyer ended up losing, but whatever. Not my fucking problem. I'm at the end of the day, dude. If it's a good deal for me, I'm gonna do it. I'm shady as fuck when it comes to business transactions, man. I'll make it happen.
Yeah.
Don't mess with Chris's money. That's all.
Yeah, it's so interesting because you guys are talking about this age-old problem of like why realtors are needed, and it seems Zillow has relatively killed it just by building that marketplace, but the actual work of getting it done still feels like, or at least people still feel.
I mean, all they do now is they say, this is the area that I want to look at, 3-bedroom, 2-bath. Let's look at the MLS. And it's like, you wake up in the morning, you get an email. These are the new houses that are 3-bed, 2-bath under your price range. It's like, they're not actually doing any. Yes, they make phone calls and stuff of the like, but I mean, and there are some people that are more difficult than others, I will say, that want to see like 18 different houses. For me, I saw the house I liked to buy. I bought it. And like, it may have been very little effort on their part, and they were able to walk away with, I don't know, 25 grand or whatever it was.
Yeah. You just, when you're buying or selling a home, you need 3 things. Okay. You need one, good lawyer that's going to do the closing with you, right? So this way they read up on all the contracts, do that. You need a good inspector. If you're going to buy a property, make sure you get a really good inspector that's going to like look at every nook and cranny, because there are certain things. Like I was about to buy an office building here in Georgia, and it was a really good deal at the time. It was during COVID and everything else. And I was like, man, once COVID is over, it's going to be okay. So this guy went into like some crawl spaces, and literally this guy, he was worth it. I paid him like $500 to do the inspection, but this guy was thorough. My brother-in-law, who's a lawyer, recommended him. He went into every crawl space. He came up to me and said, look, don't buy this. I don't care. You don't have to pay me the $500, but don't buy this. I was like, what? Why? It's like, because the foundation all around there is all cracked. You're going to end up spending probably close to like 30, 40 grand trying to repair it. If not, so don't buy it. And I was like, okay, no problem. Saved me a headache. But guess what? If I hadn't got that inspection done, wouldn't have known. Some people, they're dumb enough to do these, buy a home without an inspection. Don't do that. So you need a good inspector and a good lawyer. The lawyer knows the terms of the deal. They can negotiate everything, and they can do the title search for you to make sure that all the titles are clean. I don't know if you know what that is, Amit, how that works.
The titles is who actually owns the house, whose name is
right.
The house, right?
But also if there's any liens against it. You know how many times people have bought a place and it's like they've got fucking multiple liens on the property?
Especially if it's renovated. People,
yeah.
like if you don't pay a contractor or something, they can take a lien out on the house to say, hey, this person never paid me. And they'll you end up getting screwed because now,
Yeah. So it's you like I said, those are the 2 things that you really need on your side. After that, everything is good.
Okay. That's it for us. Thank you all for being here. 195 of you means a lot at 12:20 a.m. Eastern Standard Time. We'll be back next week with Palantir Weekly. And make sure you guys watch Coestrap's video tomorrow. I'll make a little clip of our goodbyes to Coestrap, and we'll keep going from there. That's it. Thank you guys. Appreciate it. We will see you next week in the world of Palantir. Good night.
Thank you guys.
Later.